Buy to let. This is the best way to get into owning property and earning rental income. Buy shares in WP Carey Incorporated. This is a Reit, a real estate investment trust. It has tax advantages over normal companies as it is a Reit, but has to pay out 90% of its net earnings to the stockholder. This company operates as a real estate investment trust through two segments: real estate ownership and investment management. It owns and invests in commercial real estate properties. The investment management segment structures and negotiates investments and debt placement transactions for the real estate investment trust and manages portfolios of real estate investments. The 52-week range for this company is $66.12 to $83.19. This is the value of the stocks. The current price is $77.66. The analysts predict a upside in the value of the stock of 12%. Dividend yield is 5.58%. This is very attractive, and this dividend yield has been increasing for the last 25 years. The price to earning ratio is 31.57. This is the number of years earnings needed to pay for the company. In other words, 31 years. The market average PE ratio is 13.99 and the sector average is 11.38. Bear this one in mind. The price to book ratio is 1.98. Anything under 3 indicates that the company is reasonably valued with respect to assets and liabilities. As I said, the price to earning ratio is too high, but this is the only downside on the selection of this stock as I can see it. The market could be overvaluing this high PE company, and it could come down to earth with a bump. The dividend sustainability has a payout ratio of 83.9%. May not be able to sustain this current dividend. As I mentioned, the dividend yield, or I may not have mentioned this, is 5.58%, which makes the company attractive, plus the potential analysts' prediction of the company increasing by 12%. These two factors makes this company interesting and a viable proposition. But we've got a high PE ratio, and the dividend sustainability cannot be guaranteed. So on first look, WP Carey looks a very interesting investment with potential for growth and a good dividend payout, but as you can see, the PE ratio may be too high and the dividend sustainability may not be possible. So what am I going to do? Am I going to buy or am I going to sell? I've decided not to buy, and I'm going to look for other opportunities where we have more of a stable outlook for the company. WP Carey is a potential investment, but there's the downside of the PE ratio and the sustainability of the dividend payout, so I will not be buying. Hope you found this interesting. Any comments or questions are more than welcome, and could you please subscribe to my channel. Till next time, I bid you a really successful investing adventure.